Hello and welcome to the Genesis of Wealth. We're here to explore the big ideas and strategies shaping financial prosperity, especially for you, our listener, right here in Nigeria. I'm your guide today, and well, we've got a really fascinating journey ahead. In a nation like ours, so vibrant, so full of entrepreneurial energy, where does lasting wealth actually take root? Is it like in the solid ground, the land we know, or is it somewhere else, maybe in those invisible currents of the digital age? That's really the core of what we're looking at today, this contrast between real estate and Bitcoin. Our aim isn't to tell you what to choose, not at all. It's more about demystifying these two major paths, giving you the insights you need for your own financial future. So today we'll peel back the layers on both. We'll look at what they fundamentally are, how they generate wealth, and importantly, why they've caught on so much here in Nigeria. And along the way, we'll definitely start to highlight some key differences, maybe challenge a few common ideas. Think of this as our foundational chat on navigating Nigeria's wealth landscape. Okay, so let's start with something familiar.
Literally familiar. Real estate. I mean, in Nigeria, think about land being developed in Ibejuleki, those big commercial buildings going up at Abuja. Property's always been huge. A cornerstone of wealth.
Absolutely. It's more than just an asset, isn't it?
Exactly.
It's so deeply woven into our culture. It signifies stability, legacy, even status.
Yeah, you can touch it, build on it, pass it down. It feels permanent.
Precisely. And it's fascinating how it connects to, our collective goals, often the first big investment for a family, a tangible sign you're making progress. Now, how does it make money? Well, the main way, as you'd expect, is appreciation. Think Lagos, Port Harcourt, prime spots. Property values there have, historically, climbed impressively, often beating inflation by quite a bit.
Right, and that's fueled by things like rapid urbanization, people moving to cities.
Exactly that. Urbanization plus our growing population. It keeps demand high. We were looking at some figures, land values in certain fast-growing parts of Lagos up over 300% in the last 10 years alone.
Wow. 300%.
Yeah. And then besides appreciation, you've got rental income, consistent cash flow. Nigeria has this, persistent housing shortage, especially in the cities. So demand for rentals, very high.
Makes sense.
Lagos, for example, usually offers pretty attractive rental yields. We saw a report, average yields in places like Ikoyi, around 7.5% last year.
That's quite significant.
It is, especially compared to, say, standard fixed income options. And then there's leverage. Using mortgages. Now, getting a mortgage here can be tricky. We know that.
Definitely a hurdle for many.
But if you can, it lets you control a bigger asset with less cash up front. It's a powerful tool, potentially.
Yeah, the distinction about access to leverage is really important. It reflects the reality.
Yeah.
So it feels like real estate is seen as this reliable, long-term thing, an anchor. And that tangibility you mentioned, being able to see it, feel it, that must offer a real sense of security, especially when things feel uncertain economically.
It does, a very profound sense for many.
And given the housing deficit, the urbanization, the demand seems built in, supporting that idea of permanent ownership. We all know stories, right?
Wow.
Someone inheriting land, the house. It's foundational for generational wealth here. But how does that perceived reliability hold up against, say, high inflation? Or when the Naira's value shifts?
That's a great point. And that's where its role as a hedge really comes into play in Nigeria. Our sources, they consistently point this out. When the Naira weakens or inflation spikes, real estate is often where people turn, like a safe haven.
Right.
Because when your cash is losing buying power, a physical asset like land or a building tends to, hold its value better. In Naira terms, it might even appreciate, giving you some protection.
So it cushions the blow somewhat.
Often, yes. It's not completely immune, of course. Economic downturns can affect it. But that intrinsic value, that basic need for shelter and space, it helps.
Okay. So that's the solid ground of real estate. Familiar, tangible. Now let's pivot. Completely different direction.
Yeah.
Something digital. Bitcoin. For a lot of Nigerians, it's become way more than just a buzzword, hasn't it?
Oh, absolutely.
Like a lifeline for some.
Yeah.
A whole new way to think about money. So Bitcoin, for anyone maybe less familiar, it's purely digital, a cryptocurrency, decentralized, built on blockchain. And the really key thing is, unlike the Naira or the dollar, no central bank controls it, no government.
Right.
It's a different kind of financial control, a new frontier, you could say.
And one of the really interesting things about Bitcoin, especially for people here, is how it generates wealth. Mostly it's price appreciation, its value goes up.
Okay.
And that's driven by global supply and demand. Plus, crucially, it's scarcity. There will only ever be 21 million Bitcoin. That's built into the finite supply.
Oh, okay. Like digital gold, some people call it?
Exactly like digital gold, limited supply, growing demand from around the world. That tends to push the price up over time. And specifically for Nigerians, our research keeps showing its usefulness as a hedge, again, against Naira devaluation, high inflation.
Right. Similar role to real estate there, but in a different form.
Precisely. When things are economically turbulent and your savings in Naira might be losing value fast, Bitcoin has offered, for many, a relatively stable store of value, sometimes even appreciating significantly. It's a way to kind of preserve purchasing power outside the traditional system. We see this theme again and again in user stories, economic analyses.
And that directly explains why Bitcoin is so popular here, doesn't it? Nigeria consistently ranks super high in global crypto adoption.
Top 10, consistently.
Yeah, I saw that Chainalysis report, something like 33 million crypto owners estimated back in 2022. That's huge.
It is.
And what the sources suggest is it's often less about just gambling or speculation and more about real practical needs, filling gaps in financial inclusion, fighting inflation, finding alternatives when the traditional banks, well, maybe don't serve everyone perfectly. So Bitcoin kind of represents this financial sovereignty idea, a direct way to plug into the global digital economy.
Yes, bypassing some traditional hurdles.
And even with regulations changing, like the ISA 2025 classifying crypto as securities, which brings new rules and opportunities.
Right, formalizing things.
That peer-to-peer market, the P2P trading, it just keeps going strong. That resilience tells you something about the underlying demand, doesn't it?
It absolutely does. It shows organic need. And that P2P strength ties into Bitcoin's other big advantages: portability and global access. Think about cross-border payments, remittances.
Oh, yeah. Huge for Nigeria.
Huge.
Yeah.
Sending money home from the diaspora using Bitcoin. It can be way faster, minutes instead of days, and often much cheaper than traditional methods.
Fewer fees, fewer intermediaries.
Exactly. That's a massive deal for families relying on remittances and also for, informal traders doing business across borders. Smoother, faster value transfer. It's a game changer.
Okay, so we've looked at the familiar real estate and the, let's call it revolutionary Bitcoin. For you listening, the really practical question is, okay, how do these actually stack up against each other in Nigeria? Where do they really differ day to day? Let's draw out some contrasts. First, just managing them. Totally different, right?
Completely.
Real estate is physical. You need surveys, titles. You need to understand local land laws, maybe deal with agents, omnile.
Boots on the ground stuff?
Whereas Bitcoin,
Yeah.
purely digital. It's all about securing your wallet, managing private keys, understanding cybersecurity, different skill set entirely.
Absolutely. And then there's liquidity. How quickly can you turn it into cash? Bitcoin. You can trade it pretty much instantly, 204/7, globally if you have internet. Need to move value fast. It works.
Right?
Real estate in Nigeria, well, that's another story. Transactions are famously slow, complex.
Usually.
Months. Easy. Sometimes longer. Getting all the paperwork, the approvals, the searches. We often hear 6 to 12 months on average. That's a long time if you need cash quickly.
Yeah, that's a huge difference. Liquidity is key.
Right.
Okay, what about volatility? The risk level. How do they compare here?
Also quite different, with local twists. Real estate, especially in good urban spots, generally feels less volatile long term. You see that steady appreciation we talked about.
Right. But it's not risk-free.
Definitely not. Local economic dips can hit it. Government policy changes, land use rules, new taxes that can impact values. Even delays in planned infrastructure projects can hurt. We've seen state policies suddenly freeze sales or affect values in certain areas.
So local factors matter a lot for real estate risk.
Exactly. Bitcoin's volatility, on the other hand, is more global. You get these rapid price swings, yeah, but they're often driven by international news, global economic trends, regulations in other countries, even just online sentiment or speculation.
So the source of the risk is different.
Very different. Your property in Abuja might dip because of a local policy. Bitcoin might swing wildly because of something happening in the US or Asia. Higher potential returns, maybe, but definitely a higher level of unpredictable global risk.
Okay, and this brings us to maybe one of the most important points for many Nigerians.
Yeah.
Accessibility, getting started.
Yes. Huge difference here.
Real estate, I mean, yeah, maybe you can find cheaper land further out, but buying established property, especially in the cities, it usually needs serious capital, big down payments, and getting a mortgage, as we said, is tough.
Yeah.
High interest, strict requirements,
Yeah.
locks a lot of people out.
Exactly. Bitcoin, though, you can start really small. You don't have to buy a whole Bitcoin. You can buy fractions of Satoshis.
Right, like tiny pieces.
Tiny pieces. Someone would just say a few thousand Naira can actually get involved, can start investing.
That really opens things up.
It totally democratizes access in a way traditional assets often don't. Even with banks being cautious due to regulations, that P2P market means the low entry cost makes Bitcoin far more accessible to, well, a much wider range of people across Nigeria. It empowers individuals who might otherwise be stuck on the sidelines of wealth building.
So let's try and wrap up this initial discussion. What's the takeaway for you, our listener? Today, we've really just introduced two powerful but very different paths to building wealth here.
Yeah.
You've got real estate, traditional, tangible, offering stability, maybe rental income, and that clear line to generational wealth.
The solid ground.
The solid ground. And then Bitcoin. Innovative, digital, offering that hedge against inflation, amazing global access, and the potential, at least, for rapid growth.
The digital frontier, yeah. And we've seen, one is rooted in our physical world, our culture here. The other thrives in this borderless digital space. Both have unique upsides. Both have unique challenges, especially within our Nigerian context. And this is really just the beginning of our conversation on the genesis of wealth.
Indeed it is. In future talks, we'll get much more practical. We'll look at actual investment strategies, how to navigate the rules and regulations for both, what the future might hold here in Nigeria. We might even explore other newer ways people are finding to build prosperity. For now, though, thank you so much for joining us on the Genesis of Wealth. As you think about your own financial journey, here's something to consider. In this fast-changing world, where will you choose to build your legacy? On that solid ground you can touch. Or maybe in the boundless possibilities of the digital future. Join us next time for more insights on your path to prosperity.